Hi guys, welcome to honeystocks.com analysis for the weekend of the 24th of August 2019. Now, this video analysis is being done for my email list actually. I sent out a message 24 hours ago just asking my email list if there was any stocks that they felt like they had a little bit of concern over, and naturally I'm just going to walk through some of the more popular stocks that they've requested. So hopefully you find this useful. There's a lot of stocks here again, and naturally I'll talk about the overall market, etc. But as always, please pause the video and just make sure you're comfortable with that before going ahead. So there's a lot of ideas here, and I think what you need to understand is that the market is not rewarding aggressiveness at the moment. Now, the charts I'm about to go through, I'm not a day trader. I have a time horizon that's generally weeks to months. I don't believe in get rich quick schemes. I am not constantly in and out of trades. And that's something that you need to bear in mind when you're observing some of these charts if this is the first time that you've come through to my work. I'm currently registered with the CMT Association. I'm working my way towards my chartered status at the moment, and I know there's many of you out there at the moment that are obviously stepping in the brown stuff at the moment, and naturally the emails and messages that I'm receiving, it's borderline heartbreaking because I understand that it doesn't need to be that way. There's many of you that are probably feeling like you're getting knocked out a little bit, and hopefully this just helps in some way. If you enjoy the video, subscribe to our YouTube channel. We try to upload a couple of times a week. If you do like this video, again, if you share it on social media, give it a thumbs up. Let me know in the comments if you found it useful. It all helps to get through the YouTube algorithms as well. The two videos that I've done this week, which I've had a lot of response and a lot of emails and messages about, is Jackson Hole, what to expect technically. That went out on Tuesday, and then on Thursday I sent out that video just saying why risk off is smart just now as well. Naturally, both of those scenarios played out pretty much to a T, so it is definitely worthwhile subscribing to our channel because I do like to kind of throw some stuff out there. But this is all about the email list, so I'm just going to go through the charts that you guys have requested, and if there's any questions that you have, then feel free to let me know. But I think the first thing to touch on is the overall market. Now, I'm not going to talk about the overall market too much because I've done it to death this week in my previous videos why there was such a huge concern going in this week. But you need to keep an eye on what the key levels are. Now, this is the S&P 500 equal weighted index. You need to be careful here. If we get a break below this level, then it's going to likely get pretty bad. So absolutely, you need to be aware of that. Now, I've also talked about the Russell 2000 and why it's been such a concern for me over the last few weeks. Again, I'm not seeing any strength here with the small caps. I think if a basket of 2,000 stocks decides to plummet, then that's not going to be good news for the stock market. I've said it a million times, there's always one index that gets the party started when we talk about corrections and big severe drops. So yeah, this is very much a risk off scenario for me at the moment, but I'll walk through what I'm seeing in some of the charts that you guys are currently in at the moment. So I've talked about this one a few times over the last few weeks, and I'll do it again. Netflix, I taken a lot of heat a few weeks ago by saying that this was a short, and that thesis has been proven correct. Even over the last 2 weeks, I've had nasty emails, nasty messages saying I don't know what I'm talking about. It's there. I think this is where technical analysis obviously plays out. Fundamentally, I'm sure it's a good company, but I don't really look at the fundamentals. I'm very much 90% technical. And if you're in Netflix at the moment, I'm not seeing any real good news technically. There's a very logical target in play here for Netflix. So yeah, I mean, if you're currently holding Netflix, I think the question to ask is why did you buy the stock? understand the reasons for getting into the stock in the first place. If you like the company, then great. But if you're a technically minded trader, it just doesn't meet any metric for taking a buy position whatsoever. I'm not a contrarian. I'm not looking to buy dips and dollar cost average down, because that's just complete madness. So yeah, that's really what I'm seeing with Netflix at the moment. Apple, again, very, very consistent on this one. I think above $200 I'll remain bullish, but I think as soon as we drop into this area here, I think it's a problem. So if you're currently holding Apple, again, I don't know what your entry position into the market was for Apple, so it's just a case of managing risk very, very closely. Be mindful of the overall market, because at the end of the day, the market is what is going to drive the individual stock most of the time. Sure, there's going to be some anomalies. Some stocks will continue to perform upward in the face of a declining market, but by and large, you can expect your position to decline if market support levels break. ZS, again, I'm not really seeing anything here with ZS that is consistent, I think would be the word to use here. It's obviously been on a trend in the past, but I think when you kind of zoom out on the chart and you obviously build in support levels, I'd be super wary below this level. I think technically, absolutely, you can be bullish above this level. I think below this level, if you're looking at things technically, it's going to start to become a bit of a problem. So I don't know if that's necessarily a stock that I think there should have been a position actioned on in the first place. But again, I don't know what the entry position was. If you've entered way down here, happy days, great. But if it's a recent position and you've been buying it as it's coming down, that's a problem. So yeah, that's the level to watch, I think, for ZS on a technical level. Tandem Diabetes is actually a case to be made for profit taking at the moment. I think if we get a breakout with this one, then it might be interesting. But I think for me, in a declining market, I probably wouldn't look to be taking breakout trades. I think you need to be flexible in your approach. You need to have an understanding of what represents a high probability entry into the market versus a risky entry into the market. So yeah, again, I don't know what the entry position is with Tandem Diabetes, but that's kind of my view there. I think if you break below this support level and below the 200 MA, I think that becomes a problem as well. Okta. Now, this is a stock that I've done very well on in the past. Many of my clients have done incredibly well on this recently. But again, it's about understanding where the danger is. I think when you understand where to get defensive, when to get defensive, it's not just about the individual stock, as I said before. Quite oftentimes it's about the overall market. And I think if Okta breaks below this level, I think that's the signal to me to say, okay, is this trend going to continue? Possibly, possibly not. So yeah, that's really where I'd be looking at for Okta. Cisco Systems, again, talked about this one the last few weeks. Breakdown there, all bets are off for buy positions as soon as you break below this level. It might recover, but the path of least resistance is downward at the moment. Sometimes stocks they lose their appeal, and I think as soon as the big money starts to scale out of positions, and I think as soon as the sentiment, the momentum, etc. starts to decline, doesn't matter how good the company is, if it's not appealing to investors or traders, it can take a long time for the stock to recover. So this is why I prefer to have a very rules-based approach. I've got my trading plan in place, and at the moment I wouldn't be a buyer of Cisco just purely based upon my own rule set. If you've got a rule set that says you can buy it, then go ahead and buy it, but it's not one that I would personally look to consider. I think TLRA is interesting. I think purely for the fact that it obviously had a good up day in the face of adverse market conditions over the last few days. Now, I've not gone in and looked at what the company does or what what they do, because like I said before, very technical. I think for me, you've clearly got what looks like a breakout, so I think you can be bullish above this level. But again, if it's a new position, would I be taking buy positions in a declining market? Possibly not. But I think the one message I really want to get across here is we're not in a bearish environment in the overall market at the moment, in my opinion. I think where we are at the moment, it's very much a case of just being very defensive, being very risk averse. If you are out there and you have a full portfolio, you've allocated all your risk, and you are watching your investments start to decline, and you're having the mental barriers that go along with that, again, I would just question your understanding a little bit of what is actually going on with the overall market at the moment. So yeah, just be very careful. I mean, if you're in TLRA and you're performing very well on it, absolutely continue to hold, but just make sure you've got the plan in place for that trade and just execute on the plan. Don't overcomplicate things. Just manage the trade, risk management. That's what it's all about. Now, GDXJ, I think there's a lot of justification at the moment for precious metals and gold in particular. Now, again, I've been on the record with GDXJ and gold in general for the last 3 months. I did a YouTube video a few months ago on gold and why it was a good place to allocate risk. Now, it's no coincidence that when the stock market starts to decline a little bit, other areas start to move. Gold is one of those areas. There's many of them, but yeah, it's moving. For full disclosure, I have a position in this particular ETF at the moment. It's performing well, and absolutely the expectation is that this starts to move to $50, and then if we get a break above that level, then that will offer a potential new entry into the market. Now, at the moment, there's still a good 20% upside here, and I think we can probably say with a reasonable degree of certainty that if the market, with equities, continues to, have the negativity and the loses a lot of favour, you're going to find that gold starts to move. So there's many areas within gold that you could look to exploit and profit from, and this is just one of the areas. Nvidia, now I've seen it on social media this week from super popular, well followed individual who was essentially advocating a buy position in Nvidia. Now, my message at the time was, no, it's not. You need to be super mindful here. It's not just about building a technical analysis to fit your own individual thesis. What you need to do is be incredibly impartial, and you need to build the analysis as is. And this is something that's lost on everyone. I think you need to take a step back, build the analysis, take an objective view, and not be swayed by your own personal beliefs on a company. And when you do that with a stock like Nvidia, which is a stock that I've done very well on recently, you have to have an understanding of where the optimal entries are. To buy below here, which is where this individual was advocating, just complete madness. And you just need to be patient sometimes. Now, obviously, it's not helped by the overall market, and I think a lot of you out there are probably blaming Trump and his Twitter meltdowns, but is Trump the issue, or is it your own individual understanding of the risk in the market that's the issue? It's a double-edged sword. You could make a case for either. So, absolutely just be mindful. If you're looking at Nvidia at the moment, or you're in Nvidia, you need to be wary. Sorry, excuse me. you need to be very wary of the key support and resistance levels. Now, this is a stock, MDT, that is, it's been performing pretty well this week. Some of my guys actually taking positions in here. Now, it's taken a long time to get going. I actually had a position in this around 6 or 7 weeks ago, and it was moving so slowly that I just cut the position. I think a very minimal profit at the time, and but the trend is there. I think if you understand that not all stocks are going to blast off 50%, $10 within a couple of days, but sometimes when we have adverse market conditions and we look at defensive plays, slow and steady definitely wins the race. All the hedge funds in the world will be getting absolutely crushed right now, and when you understand that if you can turn a profit during adverse market conditions, you've won the battle, because you're preserving your capital, you're just doing generally all the right things. If you're making a profit in adverse market conditions, keep doing what you're doing. But if you're not making money in adverse market conditions, or you're struggling a lot, maybe again rethink what you're doing a little bit. PayPal, again, a few of my guys have got positions in this at the moment. I think the stance is still the same. I think we can be bullish above 102. I think below $100, and it's probably a very poor market condition if PayPal, and I'm going to go over a few more charts in a second with the payment processing companies, but I think PayPal, absolutely you need to be very, very mindful there. Starbucks is holding up pretty well. I think the caution level, I think, is around this level. I think you get a drop below. And I think the other thing to say with Starbucks is its profit should have been taken up here. It's a logical area for profit taking. That's what's happened. So it's moving in a sideways range at the moment, which is probably needed. If you look at the run that it's had, I think only Shopify is the other chart that looks as good as that. And absolutely, again, be mindful of the key areas with Starbucks. Visa, again, super mindful. I think this is the level to watch. I think if we break below that level, cautious time. Not saying it's going to drop like a stone, but it would definitely warrant a little bit of caution. I think that's probably the words I would use. Kirkland Lake. Now, for those of you that maybe don't know, this is a company that's obviously aligned with gold. So what you can sometimes do, and I've alluded to it just a second ago, is obviously with gold, and you can move into various areas of the market with gold, but the individual stocks, if you can identify where the strength is with the individual stocks, again, it's half the battle. Kirkland Lake is a stock that's been performing very, very well. Quite a lot of my guys have been accumulating on this over the last few weeks, and again, it offered entry recently, and it's moving now. I think if gold continues to perform, I think the expectation is that Kirkland Lake should, in theory, follow suit a little bit there. Now, AYX is one of the charts of the year. Again, this is one that some of my guys have been accumulating over the last 6 months, and it's going beautifully. Again, a little bit of a pullback recently. I think, again, it's about just understanding where the key support and resistance levels are with AYX. And I know there's many of you out there that have maybe picked this stock up from my analysis videos over the last 3-4 months, and I suspect that's maybe why this has been requested this week. But again, what I said before is, although the market might decline, you're always going to have the anomalies of some stocks continue to outperform, and that's fine. If those stocks continue to perform, great. Just keep managing the trade. Just keep just don't overreact. If you are not comfortable with the overall market, if you're not comfortable with having position in the market and you maybe want to offset profits with losses a little bit, you might want to consider what you're doing with this stock. But I think you just have to be bullish for as long as the stock is bullish, and that is just complete logical and common sense. You don't need to overcomplicate things here. So absolutely, I think AYX is one of those that's continuing to perform, and unless there's a complete meltdown in the market, I think you can probably still be bullish. Kronos Group is another one. Now, this is a stock that's obviously been on a bit of a steady decline recently. I don't see the decline stopping anytime soon. I think the next logical level is around $10. I think one of a couple of things is going to happen. I think you're going to probably go down there, or you are going to get a bounce to the upside. What happens if and when we get here, nobody knows. But I think all you can really do is just prepare yourself, understand what the key support and resistance levels are, and I do think if you drop below this level, it's probably not good news. There's many of you out there that are probably coming through from social media that are completely married to weed stocks, maybe because they're cheaper stocks, maybe because you just like weed, whatever the deal is, it's all good. But you have to understand that technicals play a part, and if you are buying up this stock blindly without understanding what is actually going on with price, then that's maybe something for you to look to address, or just maybe find an understanding of something somewhere. But Kron just is not appealing in the slightest at the moment. Maybe in future I would be very, very tempted to short this below this level, but again I could potentially be a buyer if we get a significant bounce off this level. So yeah, Kron is very much on the downward turn at the moment. Facebook, a couple of weeks ago I highlighted this level as an area to watch. I think we get a break below that, it's probably worth reconsidering. This is what I've shown before as the defensive zone, and what happens here is I would expect this to drop to 170. I think if you drop below 170, it's logical that it goes to around 160. I think if it drops below 160, it's an issue. So for those of you that are in Facebook at the moment, I think it's obviously very much market dependent. I think if we continue to see a sell-off in the market, Facebook is going to tank along with it. So yeah, you need to be super mindful of what you're doing here. I think if one thing technicals have really helped me with is when you look to the market last year, and obviously over the last 18 months where we've had 3 very definitive big drops in the market, I think if you understand, it's not about predicting crashes, it's not about predicting corrections, but what it is about is understanding when to get defensive ahead of time. What value would you put on being able to get defensive ahead of time? And that's something that technicals provide me with. It's helped me, my client group over the last 18 months, all get defensive ahead of time. And then what you simply do is you understand where to allocate your risk there once the market declines. And then when the market finds support, you understand, okay, let's get back in here. And there's minimal damage. There's not any real mental hurdles to get over either. So that's really what I would urge you to do. If you're somebody out there that doesn't really understand technicals, I would urge you to maybe look into it and figure out what you're trying to accomplish. And I suppose that just brings me, full circle around the charts that everybody has requested this week. And like I said before, if this is your first time coming along what I do, I'm Sam, and as I said before, I am registered with the CMT Association, working towards chartered status at the moment, and I also run honeystocks.com trading school. Now, I think that the first thing to say is that I think with the approach I have, I can't help everyone, unfortunately. I have a very specific style that is just not geared towards everybody. So I think if you've got a business or a career, if you want to move away from day trading, I think if you're looking for consistency, if you want to learn and not just follow others, I think those are the types of people that I can help. And I think if you want to trade, learn a style with minimal stress, if you want to align with a successful trading group, and if you want to be able to just enjoy life a bit more without the added stress of the market, then I can probably help in some way. And one of the ways I can do that is help you with building a trading plan and a rule set for the rest of your life. What's different about what I do is that I log every single trade idea that I post to my client group, just so that anybody that is interested in perhaps coming in and learning, they can go in and have a look and say, okay, these are the types of stocks that he sends trade ideas out for. And you can figure out if it's a style that you would like to learn. And if it is a style that you would like to learn, as I said before, it helps with getting defensive. This is a post on the 1st of August where I'm just advocating get defensive, guys. Because many of you out there, and as tough as it is, I know that many of you out there will be learning from losses and watching YouTube videos, reading a number of books. A lot of you are just going to be getting swallowed into a big black hole by Wall Street, and it's so difficult. I understand it. I know. And what we do at honeystocks.com is we completely believe in making a difference. I'm not just saying that, that's not just words. You can go onto our website, you can check out our bank of client testimonials, what we do, very open about what we do. We don't teach, as I said before, get rich quick schemes. I'm not interested in making hundreds of thousands of dollars, which I've probably turned down at this point for trade alerts and signal services. It's very much based upon education and teaching you to stand on your own 2 feet. That's wholeheartedly what I believe in. And absolutely jump onto our website and see what we can do. And if you feel like you'd like to learn a new way and you've had enough of the old way, get in touch. It's very, very simple. You can jump onto honeystocks.com and click join or apply. Just choose a time and tell me what you struggle with. I've had hundreds of conversations at this point with traders across the world that just struggle really, really badly, and a lot of the time I can help on a phone call. If the issues are not something that can just be resolved in a 20-30 minute chat, then obviously I'll make you aware of what it is that I do, exactly what the costs are, etc. I'm not going to try and force anything down your throat. I can only work with a certain number of people at any one time anyway. So if you feel like you are somebody that struggles and you would like to talk to somebody, then you can talk to me personally. So just jump onto the website, just pick a time. I'm going to open up my calendar for the next 3 days. We'll have a chat and we'll see if we can help. But it's very, very straightforward, guys. And if you've stuck around to the end, thank you very much for watching, and maybe I'll speak to you soon. Thanks.